Let's go to Scott Martin on this. I mean, the fears have been rising over a trade war, and we've been talking about them. What would you say, Scott? Because there's kind of two schools of thought. I mean, I've kind of been saying from day one that this is the president's way of seeing the world. You know, like it or not, this is how he sees the world. He's talked this way for 30 years. It was Japan in the 80s. It's China now, whatever. This is how he sees it. There's some on Wall Street, though, I feel like, that are just waiting and hoping he kind of moderates his position, even with Gary Cohn out. And I don't know. We haven't seen that yet. What do you think?
No, we haven't. I mean, the tough talk is disruptive. You're right, Connell. It's not the status quo that we've seen from previous administrations of recent, past. So, yeah, I think Wall Street worries about change. Now, overall, I like what Trump is doing as far as looking out for America, but this is a drastic change. And so you're talking about import tariffs as a net importing country here. You talk about a tax on maybe Canada or Mexico when it comes to what we import from them. Two major trading partners. Of course, NAFTA comes up here. You're talking about impacts to the American consumer and impacts to the S&P 500 stocks that still have to be worked out depending on how tough we get.
And that's the point, depending on how tough we get. And we've always had tariffs, right? And we've always had, every now and again, somebody will get out of hand. You want to target them, maybe in this case, China. And the president's tweeted about that today, about intellectual property. He probably has more broad support for something like that. But do you read it as a shift in policy? Because if that's what it is, big time, I mean, that's huge because, post-World War II, we've been a free trading country, right?
Yeah, I do read it as a shift. Now, I do read it to some degree, at least the initial overtures, as a testing of the waters, if you will, right? Just to see what the appetite is for what we can get. But the reality is, yes, it is a shift. It is a harder line on things, and it's something that will go through an adjustment period that I do think longer term, if we stick to some new trade policy that does benefit the American worker, and maybe there is an initial impact to the American consumer, the reality is the long-term benefits probably outweigh the short-term costs.
That's interesting. So you can be talked into it. I mean, not a lot of people in the investment community feel that way, but you could be talked into it, it sounds like. Or maybe you're already being talked into it.
Well, listen, I mean, we've got a massive trade deficit. We've sent a massive amount of jobs overseas, massive amount of production overseas. So our wealth has been somewhat taken from us in that respect. So if we make some changes here that maybe bring back those jobs, bring back that production,
well, what if we just
if we
saved some more money? But if we saved a little bit more money and didn't buy as many things, we would have our trade deficit wouldn't be as bad, but our economy wouldn't be as strong either.
But that's not the American way now, is it?
No, I mean, and do we want it? I mean, maybe we want to save a little bit more, but do we really want to stop spending? I mean, that's what never gets mentioned in these debates. So we keep talking about it. What the president does is kind of like a zero-sum game. We're importing more than we're exporting, we lose. But it feels like it should be more complicated than that, don't you think? Or
well, the good news is, Connell, is growth helps everything. Growth is really the bottom line to all this. And so it's okay to spend. It's okay to borrow as long as you're growing as an economy, as long as you're expanding your wealth. And so, true. So if those things keep kind of going on the way that they're going, and with new policies that are coming out, less regulation, lower taxes, things we've already seen from this administration, some change in trade policy could be, say, well digested.
Yeah, I haven't asked you yet, but I'm curious. Have you changed your kind of strategy and how you look at the markets because of this? And if so, how?
We have just prepared our investors, our clients, to be ready for more volatility. And by that, it means we're taking more precise shots with our asset allocation, meaning that, days like today where we have some cash on the sidelines, we're putting it to work. Days like we had earlier last week where we see massive, 400-point rallies in the Dow, maybe we take off a little bit of that higher risk stuff. So just getting the clients and investors that have entrusted us with their money, just getting them ready for more of these bumps and bruise days, as we've seen with reaction to the trade policies so far.
All right, man. Good to see you as always. We appreciate it. Talk to you soon.